Hey everyone, it's Enny, aka the Nut Trader, your friendly neighborhood swing trader, back again with another video. And here we're on part 2 of the Trading 101 10-part series. So we're on part 2 of this 10-part series, and in this video I'm going to be talking to you about all the different types of market that's available for us to trade. So these are 7 markets available for us to trade. We've got commodities, indices or indexes, foreign exchange, stocks and shares, bonds, ETFs and cryptocurrencies. Commodities are raw materials used in the production of most other goods. They're split up into 2 categories and then several subcategories below that. You have hard commodities, which are precious metals like gold and silver, base metals like copper and zinc, and energies such as natural gas and oil. And then you have soft commodities such as agricultural produce, such as coffee, cotton and soybeans, to name a few. Stock market indexes group similar stocks. This can be based on which country's stock exchange they are listed on, such as the FTSE 100, which is listed in the London Stock Exchange, and Dow Jones, which is listed in the USA. Or they could be based on industry sectors, such as the S&P 500 and FANG. These indexes give a weighted average stock price to all stocks within their umbrella, allowing traders to gain market exposure to a batch of stocks without holding individual positions in each stock. Foreign exchange, or Forex as it's commonly known as, is all about trading the relative change in the price of 2 currencies. Some of the more popular Forex pairs to trade are GB pound, Great Britain pound, US dollar, Canadian dollar and Japanese yen. There's a multitude of Forex pairs to trade, but I tend to stay clear of the exotic currencies, as price volatility can be wild, even wilder sometimes than the cryptocurrency market. And to be honest, my heart can't take the stress of trading these type of pairs. The Forex market is unique in that it tends to be way more heavily affected by fundamental factors such as interest rate changes, political influence and geopolitical events. Then you have the stocks and shares market. Any publicly traded companies available in the stock market, and most of the higher cap stocks and even a lot of the penny stocks you can find on reputable trading platforms. Bonds are loans from investors to a corporation or government that is repaid with interest via regular scheduled repayment over time. The best way of looking at it is the same way an individual like me or you could take a loan from a bank to purchase a house, for example. The government could do the same to us and actually borrow money from us as individuals and pay us back with interest. So this is what a loan is about. This is what government bonds are about. In the case of spread betting, only government issued bonds are tradable. Bonds are attractive to investors who have low risk appetite, but they also don't mind getting low yields, as governments are less likely to default. In the case of spread betting, only government issued bonds are tradable. Bonds are attractive to investors who like low risk, low yield investments, as governments aren't likely to default. Now on to ETFs, exchange traded funds. This is a popular one, especially among a lot of the younger demographic. A lot of my fellow YouTubers, I think Ricky Gutierrez, he loves to trade some stuff like this, and I've seen a lot of people in the younger generation trading a lot of ETFs, especially the natural gas and the gas-based ETFs, primarily because of his large following. So I thought I'd cover it as well. I'm not gonna lie, ETFs deserves a video all on its own because of how convoluted it is to explain and how complicated of a tradable product it is. But ETFs are marketable securities that track a stock index, a commodity, a bond or a basket of assets. So while indexes take a weighted average of certain stocks, an ETF will track another financial asset, whether it's gold prices like GLD, or natural gas like UGAS, or QQQ, which is one of the most popular ETFs, which tracks the Nasdaq 100 index. And then there's cryptocurrencies. Bear with me. Cryptocurrencies are a decentralized digital currency that leverages cryptography and blockchain technology. If that makes no sense to you, well, I'm sorry, I don't know what to tell you. That's the definition. Either way, it was all the craze in 2016 until the market started crashing. Most cryptocurrencies are traded against the US dollar unless explicitly stated otherwise. So if you see Bitcoin or Ethereum or Ripple and it doesn't got any slash USD or slash GBP, you have to just assume it's USD. You just have to assume it's against the US dollar. However, it can also be traded against another cryptocurrency such as Bitcoin against Ethereum. But this is normally only the major ones. So that concludes this video on the different types of markets to trade. Please like, subscribe and share, and leave a comment below on the market that you like to trade the most. Not Trader, out.